Good day, everyone. Today we are going to start with regulatory framework and conceptual framework. The basic knowledge about regulatory framework, how we are going to prepare accounting standard and how accounting standard are prepared. That is what we are going to study on regulatory framework. Regulatory framework consists of IFRS foundation monitoring body, IFRS trustee, IASB. Under that we have IASB and IASB. That is IASB and ISSP's main purpose is to prepare accounting standard based on consistency concept that we will be studying again here. And we have IFRIC, interpretation committee and advisory council as well. So let's study its format, how the accounting standard are prepared. First, let's go with International Financial Reporting Standard Foundation. Especially we should know that this is not for profit making organization, and it is specially prepared for especially organized for or established for the purpose of making accounting standard, high quality accounting standard. So let's study a bit about IFRS Foundation. It is not for profit making organization. It is in private sector bodies that oversees IASB and ISCSP. The main objectives of regulatory structure, regulatory systems or IFRS Foundation is to develop a set of global accounting standards which are of high quality, understandable and enforceable. We should know that standards also require high quality transparency and comparable information in financial statement. So International Financial Reporting Standard helps to prepare standards which are of high quality, transparency and comparable informations into financial statement, so that it will help in world capital market to make economic decisions about their economic resources. And it also promote using and applying those standards for the harmonization and globalization of accounting standards. And it also bring convergence of national and international accounting standards, so that globalization world could understand same language of accounting standard. So that is the main objectives of IFRS Foundation. And then we have under IFRS Foundation we have IFRS Foundation monitoring body. We should do a little bit content about IFRS monitoring body, IFRS trustee before going with conceptual framework. Okay, so let's go with the monitoring IFRS Foundation monitoring body. It consists of group of capital market authorities to provide link between trustee and public authorities in order to enhance public accountability of IFRS Foundation. That is the main objectives of IFRS Foundation monitoring body. Under that we have IFRS Foundation trustee. This is the main body that help to appoint BOD. Trustees comprise of group of individuals with diverse geographic and functional background. The trustee appoint members of the board, IFRS interpretation committee and IFRS advisory council. In addition to monitoring the foundation and effectiveness and raising funds, the trustee will approve budget and have responsibility for constitutional changes. So this is the main body that appoint board, that sees governance, that sees strategy, that makes a strategy, and that is also responsible for each and every board, that is also responsible so that each and every board is properly funded. So that is the main concept, main aim for IFRS Foundation trustee. Under that we have IASB and ISSB. That is the main body that are preparing accounting standards. So I think most of you are already aware with the term IASB, and maybe you are very much new with ISSB. This is totally new accounting board that has been established recently. So let's know a little bit about IASB. The IASB is solely responsible for issuing international accounting standards. Such standards are called International Financial Reporting Standard, IFRS. I think in case of each country they have their own accounting standard. In case of Nepal we say it's NFRS, and then NSB board is responsible for preparing accounting standard. But in case of International Accounting Board, IASB is much more responsible for preparing accounting standards. And then accounting standard board has 15 members and it has same objectives as IFRS Foundation. We also have ISSB, that is called International Sustainability Standard Board. This is recently established board, I already told you, and it consists of two accounting standards that we will be knowing it in later on chapters, or just we will just say what are the accounting standard that has been issued by International Sustainability Accounting Standard Board, because this does not come under syllabus of diploma in IFRS. So that is also International Sustainability Standard Board, Sustainability Standard Boards. So that two bodies are mostly responsible for preparing accounting standard. And then we have IFRS Financial Reporting Interpretation Committee. These are the body that issue guidance on accounting matters with divergent interpretation of IFRS. So they have an objective to interpret all the IFRS that has been developed by IASB and ISSB. We also have IFRS Advisory Council. Their main purpose is to provide an expert view, so that is it necessary to prepare accounting standard or not? Is it necessary to change or amend accounting standard or not? Or is it good or not good to prepare new accounting standard? They will provide the advice to IASB and IASB board. After that, only IASB board will prepare new accounting standard or amend new accounting standard. I think these topics will not be these topics will only help you how accounting standards are prepared. That is what I already initially told you in the class. So let's start. So now we are going to study how accounting standard board develop international financial reporting standards. It's already mentioned here in our notes. The process for development follow principle as transparency, full and fair consultation, accountability. The procedures for the development of IFRS are as follows. Number one, the IASB identifies a subject and appoints an advisory committee to advise on the issue. So that is the first point. We hear a lot of accounting standards, or maybe there might be so many issues on so many accounting standards that might have faced by so many accounting standard board. So initially they submit their issues, or what are the issues they have faced on their accounting standard, to IASB, and then IASB seeks an advice from advisory council, and then we might have some technical articles regarding that. One great example is like Korean Standard Board has a much more multinational company, and then they were very much anyway, sorry. So IASB seeks advice from advisory council, and if advisory council give advice on the issues, either to prepare that or to left it on same way. So if they give them advice to change it, then IASB board produces an exposure draft paper, especially what are the changes that they made it in the accounting standard in exposure draft. That exposure draft is made for public comment, and then that public comment they will consider most of the public comments. After consideration of public comments, they again revise the draft based on that public comment, if there is any. At any stage, IASB may issue discussion paper to encourage comments again, and if the whole comments process is all completed, then IFRS publishes new draft, or the publication of IFRS exposure draft or IFRS interpretation committee requires, or maybe they publish it after the approval of IASB board. As we know that IASB board had 15 members, so out of 15 members, if 8 members vote for the change or to issue the new accounting standard, the new accounting standard is developed, or old accounting standard is being amended. Neither IFRS Foundation nor IASB and nor accountants profession has the power to enforce compliance with IFRS. Nevertheless, some countries adopt IFRS as their local standard. As everybody knows that every country has their own accounting standard board, and then they make accounting standard applicable that are applicable in their accounting standard. Neither IFRS IFRS board never pressurize any national body to comply with IFRS, but they IFRS boards only promote to use this accounting boards to National Accounting Standard Board, but they never force any accountancy proficiency to use IFRS. But some of the country apply IFRS accounting standards at their local standards. So that is the development process of IFRS, or that is the development process of accounting standard, or IASB, Sustainable Standard Boards. There are a few concepts that we are knowing here. First, what is reporting, what is criticism of financial reporting, what are corporate governance, what are the rules, or what are the basis that we are applying to prepare accounting standards, what is the advantage of harmonization, or what is the advantages of using IFRS, and what is the disadvantage of using IFRS. A regulatory framework especially is for preparation of financial statement, that is necessary for wide range of users. We will again we have a different concept regarding that in conceptual framework. So they need to be useful, comparable, at least provide some basic information, increase confidence, and regulate the behavior of companies toward their investors. So the main purpose of reporting is to prepare financial statement that is necessary for wide range of users. But that is necessary for users, and especially wide range of users. We compare primary users. We have primary users. We will just know about primary users in conceptual framework. And then what are the criticism of financial reporting? Financial reporting, especially financial reporting, is prepared for primary users, so that they know what is the prospect of their cash flow in future, and how effectively they have used the economic resources provided by primary users. So that is the main objectives of reporting, or that is the main objective of financial reporting. But we also have some criticism for financial reporting. It is based on historical data, everyone knows that. And then we have unrecognized assets on liabilities, internally generated, extensive disclosure. Especially you should know that goodwill, brand that are internally recognized are not recorded in financial statement, since it cannot be measured reliably, and there is an extensive disclosure requirement that can make harder for users to find relevant information. Future success will depend upon governance, risk, long-term plan, and its business activities, etc. However, they are not included in reporting based on accounting policy, and financial reporting can be manipulated by accounting policy and estimated. So it requires a high level of professional judgment. So that is the main criticism of financial reporting. We also have corporate governance. We have corporate governance. I think everybody knows about corporate governance. It is a system by which companies are directed and controlled. You will be I guess you have studied a lot about corporate governance in your previous studies. So I will just let you know about what is the meaning of corporate governance. So I already told you it is a system by which company is directed and controlled. It has been very important in recent years, and it plays a part of ethical roles in recent years. So that is corporate governance. And for your knowledge, we are using rule-based rather than principle-based approach. For your information, we are using principle-based approach rather than rule-based approach. And what are the advantages of harmonization or IFRS? Especially the result of globalization, capital market operate. Advantages of harmonization or advantages of IFRS is, as a result of globalization, most of the companies use IFRS, so that it will be easily understandable by worldwide users. Capital market nowadays operate freely, open border across the borders, so that each and every individual can easily understand and interpret accounting standards. It is a platform for wider investment choice, so that investors will not be limited to local users only, local bodies only, or local people only. So you can get investment from wider range of investment. More efficient capital market, lower cost of capital, since if you obtain loan from very cheaper sources, if you have a good accounting standard, you will get much more confidence with market, and you will get lower rate of loan. So you can obtain loan on lower cost of capital and enhance business development. So that is the main advantages. And then if we cover up in points, we can just point out we have four main advantages. That is easily understandable if prepared on consistency basis, easy access to international finance in accounting, and easier in consolidation, efficiency in accounting and easier in consolidation, easier for decision making for international investors, and disadvantage of harmonization. And then these are the advantages of harmonization. One second, got that. Advantages of using IFRS is, as a result of globalization and capital market is operated more freely, to obtain the wider range of investment and to get lower cost of capital, IFRS accounting standard is much more needed. So the main advantages of IFRS are, it should be easily understandable, or it is easily understandable if prepared on consistency basis. If whole world will use same accounting standard, of course everybody will easily understand the financial statement. And if you have a wider range of investment, if you are operated more than if your company is more globalized, then you will obtain international finance easily. If you are listed in international market, then it will be easier for you to obtain international finance easily. And then efficiency in accounting and easier in consolidation, since every accounting standard boards use some accounting, since every country use same accounting standard, it will be efficiency in accounting and easier in consolidation. It will be easier for decision making for international investor. That is an advantages of use of IFRS. And we also have some difficulties while applying international financial reporting standards. So it will be difficult to apply and maintain in different countries, since different countries have different local regulatory systems, and they may prevent applying accounting standards, since due to lack of human resources, lack of adaptability, lack of interpretation committee. So it will be very difficult to apply accounting standards in different countries, and it might be costly and unwilling in some countries. So that is the main disadvantages of using IFRS. So that is what we studied about regulatory framework. So we just completed a few things: how accounting standard is born, and what are the advantages of regulatory framework. So now we are moving to our conceptual framework. Most of you are already aware of conceptual framework. I guess everyone is from accounting background, so we should know what is everybody knows what is conceptual framework. Conceptual framework is a set of theoretical principle and concept that underlie the preparation and presentation of financial statement. Everybody should know that. So what is the main purpose of conceptual framework? The main purpose of conceptual framework is to prepare and present financial statement. So I think if we study the line here, you are much more clear why conceptual framework is needed. Now, the conceptual framework for financial reporting describe the objectives of and concept of general purpose financial reporting. I will just study this point later on. First, we will let you know what is the main purpose of financial reporting. The main purpose of conceptual framework. The main purpose of conceptual framework is to assist IASB to develop standards that are based on consistent concept. You should be much more aware of this concept, everyone. I guess you will be applying consistent concept in each and every aspect of your accounting standard and while preparing financial statement. We will also discuss about this on IS1. So you should know each and each and every accounting standard is prepared on consistency approach. So conceptual framework will help IASB to develop accounting standards that are consistent. That is its main objectives. And second main objectives of conceptual framework is to develop consistent accounting policy. Before preparing any financial statement, it's a job, it's a duty of accounting personnel, it's a duty of accounting peoples to make accounting policy. So whenever you are recording transaction, it should be based on accounting policy. But how it helps, how conceptual framework help in accounting policy, let's see that. Accounting policy especially helps whenever we don't have any accounting standards. Especially nowadays we have bitcoins, ICO, so many things that comes in the market. So we don't have any specific accounting standard for that. So in that case, conceptual framework will help. I think it won't be applicable in diploma and IFRS courses, but just I'm giving an example. So it will help how you will be recording Bitcoin, how you will be recording ICO based on conceptual framework. And it also help whenever you have a choice. I think we will be studying so many accounting standards that have choice. You can either select some accounting standard, or you can select some accounting policy or measurement techniques, or you can select some other measurement techniques. In that case also it will help you to identify or select which accounting policy is better for the company. And third is it allows others to understand and interpret the standards. So I will just let you know the main purpose of conceptual framework is preparation and presentation of financial statement, and it also help IASB to develop accounting standard on consistency concept. And it also help to prepare accounting policy whenever there is no choice, or whenever accounting standard do not give any guidance. And it also helps whenever accounting standard have choice, and which measurement basis to choice will be determined by the help of conceptual framework. We will be discussing later on as well. So that is the main objectives, main purpose of conceptual framework. And conceptual framework, you should make sure that it is not an accounting standard, but it will help you to make accounting standard. So that framework is not so that it does not override any accounting standard. So this conceptual framework has been prepared in 2018. Before that also we have conceptual framework. So there are previously so many accounting standards that has been prepared on past conceptual framework. So this line is much more applicable right now. So what it state that framework is not a standard and it does not override any specific standard. Whenever IASB decide to use new or revised pronouns, if they are not inconsistent with conceptual framework, they will normally highlight the fact and explain the reason why they have adopted that standards, or why they have override the conceptual framework. Okay, so that is the main concept of conceptual framework. Conceptual frameworks are divided in 8 chapters. So you should be knowing why we are preparing financial statement, how accounting standard board is prepared, how accounting standard is prepared, so on. So conceptual framework for financial reporting address 8 chapter. Chapter 8 include, first chapter includes the objective of general purpose financial reporting. Second chapter includes qualitative characteristics of useful financial information. Third chapters include financial statement and reporting entity. Fourth chapter includes the elements of financial statement. Fifth chapter includes recognition and derecognition. Six chapters include measurement basis that you are applying in each and every aspect of accounting policy, accounting standards, presentation and disclosures. Where should you present and what to disclose in financial statement, and concept of capital and capital maintenance. In this all at 8 chapters, I will just give primary focus on objectives, qualitative characteristics, elements, and recognition, measurement, and presentation. Okay, so let's start with chapter number 1. Chapter number 1, we have objectives of general purpose financial reporting. Conceptual framework states that the objectives of general purpose financial reporting is to prepare financial statement for primary users. You should know that Initially, you used to prepare, I think most of you might think that financial statement is prepared for all the users or wide range of users. It's not that. As per the conceptual framework, financial statement is prepared only for primary users. Who are the primary users? Primary users are their shareholders. Shareholders might be their existing shareholders, or which might be potential shareholders. They are also their primary users, or who are the provider of finance, creditors, bankers, investors are primary users. So you are preparing financial statement. The objectives of preparing general purpose financial statement is for primary users, about providing their economic resources. We will also know what is economic resources. I guess most of you are already aware, a little bit aware about economic resources. So they will provide the objectives of general purpose financial reporting will provide useful information to primary users about providing their resources to the entity, so that they can assess the future cash flow of the company, and also it will help to identify or assess the entity's prospect. The objectives of general purpose financial reporting is state that it is prepared for primary users who used to provide economic resources to company. They might be your existing shareholders, they might be your potential shareholders, they might be creditors, they might be lenders. So you should know that you are not preparing financial statement for wide range of users as per conceptual framework. You are only preparing financial statement for primary users as per conceptual framework, or as per accounting standard, we say. Okay, so why you are preparing financial statement? You are preparing financial statement for primary users, but what is the reason behind that? The reason for preparing financial statement is about resources of entity to assess entity's prospect for future cash flow. That is objective number 1. So primary users need to assess what will be the prospect for future net cash flow, and also to assess how effectively and efficiently the management has discharged their responsibility for the use of entities' existing resources. So that is the main objectives of general purpose financial reporting. So make sure that you are not preparing financial statement for wider users as per conceptual framework or as per accounting standard. You are preparing financial statement to primary users. Reason? To provide to assess entity's prospect for future net cash inflow, and also to assess how effectively and efficiently management has discharged their duties. Okay, so that is chapter number 1. Now let's move to chapter 2, qualitative characteristic of useful financial information. So this is, I guess, one of the most important chapter in terms of conceptual framework. Why is that? Each and information that you provide in financial information should be relevant and faithfully represent each and every financial information. Suppose that if you are providing some information in financial statement, it is only recorded, it is only presented if it is relevant and faithful. So qualitative characteristics are fundamental characteristics and enhancing qualitative characteristics. Fundamental qualitative characteristics distinguish useful financial reporting information that is not useful or misleading. Qualitative characteristics are fundamental and enhancing. Fundamental characteristics are relevant and faithful representation. Okay, so I have already told you the main information. If information has to be useful, it should be relevant and it should be represented faithfully. But in addition to fundamental qualitative characteristics, it should also have enhancing qualitative characteristics. There are 4 enhancing qualitative characteristics. So before that, we are just going to know 2 fundamental qualitative characteristics of financial reporting. They are relevance and faithful representation. What is relevance? Relevance information has predictive value or confirmatory value or both. It is capable of making a difference in decision made by users. If the information is relevant or not, we should be identifying by its nature and its materiality. Information is relevant. If information is relevant or not, we will be identifying with the help of its nature and with the help of materiality. So that is the reason if you see the financial statement of banking and financial institution and some manufacturing company, they show different items in their statement of financial position, because due to the nature and materiality. First, as per the nature, different institute prepare different financial statement and the format is different. And one more items that we are considering is materiality. Materiality will also help to identify relevant. Materiality is itself not an qualitative characteristics, but it will be helpful to identify relevance and faithful. So you should know that materiality will help you to identify relevant. It is just an threshold point to identify relevance. Materiality is an entity specific of relevance based on the nature of magnitude or both item. Chapter number 2. Qualitative characteristics. Okay. Chapter number 2. Qualitative characteristics of useful financial information. Qualitative characteristics of useful financial informations are, there are two qualitative characteristics. One is fundamental qualitative characteristics and the next one is enhancing qualitative characteristics. The fundamental qualitative characteristics are relevant and faithfully represent. Means that is the main underlying information, main underlying characteristics of information. So each and every item that are presented in financial statement should be relevant and it should be faithfully represent. So it is the main characteristics. I will just say fundamental characteristics are relevant and faithfully represent. So the items that are only relevant to entity and that are presented faithfully is only presented in your statement of financial statement. Okay, so we should know what is relevance and what is faithful representation. The two main fundamental characteristics that are relevance and faithful representation. So let's go with relevance. What is relevance? Relevance means the information is relevant by its nature and by its materiality. So if you see the financial statement of BFIs, banking and financial institution, or some manufacturing company, they are different because they are presented on the basis of relevant information. So the information that are relevant, that are only relevant to banking and financial institutions are prepared, are put in the statement of financial position and statement of P&L, and similarly the items that are relevant to manufacturing companies are presented in your financial position and financial statement. So you should know that information that is relevant should only be presented in your financial statement. And how to identify the information is relevant? You should be identifying the information is relevant or not by its nature and its materiality. I think by nature you will know that. For example, if we take bank and financial institutions, by nature their financial assets are more highlighted than inventories receivables. So they give much more emphasis on financial assets rather than their inventories or receivables. But when you see this financial statement of manufacturing company, they give much more emphasis on inventories and receivables rather than on financial instrument. Even receivable will consider as a part of financial instrument. I will just say investment, loans advance rather than loans and advance. So as per nature they will prepare their financial statement, and relevant also consider materiality. So you should also able to identify the material item. Material items should be also relevant. You know that material items is especially not an qualitative characteristics itself, but it will help to identify relevant. So each and every item that are materials is relevant. So we have a definition of materiality. Materiality means information is material if omitting, misstating, or upsetting it could reasonably expected to influence decisions that primary users of a specific reporting entity makes general financial statement make on the basis of financial statement. The second one is faithful representation. Faithful representation reflect economic substance rather than its legal form, and information must be complete, neutral, and free from error. I guess in terms of complete, it should be you should be able to describe it properly with all explanation notes. In terms of neutral, you should prepare your financial statement without bias, and it must not be manipulated. It must be supported by exercise of prudence. Prudence is especially used in case of uncertainty. So what is prudence? Prudence is exercise of cautions when making judgment under condition of uncertainty. It should be free from error. In addition to faithful representation of transaction, it is only possible if it is accounted for according to its substance and economic reality. There are 4 enhancing qualitative characteristics, and they are comparability, verifiability, timeliness, and understandability. Furthermore, the information should be consistent and cost constant.